to end our time together as the lender, because I get to pull from each of your areas of expertise of how that relates to the financing part of the transaction. First, I'll give you a little bit of background about me. Started in the business as a loan officer in 2003. So this June will be 17 years that I've been in the business. As I touched on a little bit before, I had transitioned into the operations side or fulfillment about 2008, I want to say. Did some processing and underwriting because at that time, you all know that that's when we had the mortgage meltdown, if you can all remember that. So my manager at the time, I was working in the Lake Norman area at Wells, said, hey, have you ever thought about going into operations? And I was like, I don't know a thing about operations, but I trust you as my leader. If you feel like I would be a good fit for that, let's talk more about that. So took the plunge into operations, started underwriting, and at that point, that's when I started to learn the full spectrum about the mortgage business, as far as compliance and underwriting guidelines, investor guidelines, what makes a loan saleable, unsaleable, things of that nature. So that is the value that I would bring to any person who's looking to do a home purchase or even a refinance, having that experience. I find that that's a rarity in this market, that you have a mortgage consultant, loan officer, mortgage banker, whatever you want to call me. I think that's added value to that process because you have someone that may be looking at your transaction with underwriter glasses on from the very genesis of the transaction. So, that's very important, because if I have those glasses on at the beginning of the process, then I can help you navigate through the transaction seamlessly in terms of what's going to be the anticipated required documentation. Of course, each underwriter has their own discretion of additional items that would tend to make them warm and fuzzy about a certain condition, but also having that underwriting background, there are instances where, if need be, we can challenge the condition that may be requested for, because there's other documentation that would afford or lead to why a certain document may not be necessary, or if it's deemed as over-conditioning because you have somebody with that background. The next thing I wanted to talk about is why I came to North Point. There's 4 products that I wasn't able to do in my previous environment that I can do now. So I no longer have to refer these lines of business out to external referral partners. So I'm friends with lots of other loan officers in the business, and it's important to build that network of people, because if I don't offer a product, then I want somebody I know to get the business too. So these are the products that made me make the switch and that I no longer have to refer out. Number 1 being the one-time close construction to perm. There have been environments where it was 2 closings. We at North Point do a one-time close. That's huge for all the parties involved. There's a appraisal and then an inspection that is done that attributes to that construction transaction being a one-time close. So most borrowers are going to be attracted to the one-time close because the first thing they think about, well, I don't want a 2-time close, and I'm paying closing costs twice. So that concern is eliminated in that regard. Next, we lend on land or lot loans, such as the young lady that you described, Tamara. Then thirdly, bridge loans. If you have a borrower, a lot of times in relocation scenarios, if you have someone that currently owns a home, they know they're relocating, and they want to go ahead and purchase the home that they're moving to, and they haven't had enough time to sell the home, or they just haven't listed the home or anything of that nature, but they want to go ahead and purchase, we have the ability to bridge their transition for relocation. And then 4th, renovation loans, which is what I want to hone in on, since our conversation today is about property management. You'll find a flyer, it's called Build Up or Fix It Up. some of the programs within that space is the vacant land program. The bullet points show that you're eligible to do that for homes up to $500,000. There are ARM products available for that. I think the industry has made people fearful of ARM products. There are benefits to people having an ARM product, especially if it's not a home that you're going to retain for a long time. For instance, I have had and also sold mortgage products that have been on an adjustable rate mortgage. And I'll tell you the benefit to that, because you hear so much about you don't want an ARM, but let me tell you the reasons why you may. There is a fixed period that the borrower can get for having an adjustable rate mortgage. For instance, you could have a 3, 5, 7, or even 10 one arm. That first number, or the top number in the fraction, is the years that it is fixed. So it's going to operate, as far as payment is concerned, just as if it were a fixed mortgage. The 1 represents the thereafter period in which it can adjust. Does that make sense to everybody? Mm-hmm. So the reason why that would benefit a person, if I know I'm moving into the home, or even in a property management or renovation space, if it's going to be an investment property, if I go into it knowing, as the same scenario that Brandy utilized, that I'm going to just move in it, live in it for 2 years, I'm able to avoid the capital gains tax, because the 2 years is going to give me the allotted amount of time to be able to do the renovations that I need to do. Why wouldn't I get an adjustable rate mortgage? Because I'm going into the property knowing I don't plan to retain it other than the time that I need in which to make the renovation. So let me take advantage of that lowest possible rate, because that is my action plan to begin with. So that is the benefit of having an adjustable rate mortgage for reasons like that. So when you hear people out in the marketplace run their scenario against yours, you never want to align what somebody else's purpose for doing a deal is with yours. Because just like credit and DNA is different, it's the same thing with the mortgage transaction. Somebody else has a different score, because no 3 scores are alike. People have different debt load. You know, there's all these different anomalies that are pertinent to your situation. So don't ever make a comparison that, well, my neighbor told me, or they got this interest rate because of this. Your scenario is just as unique as your own DNA, okay? The construction program, we talked about having the one-time close, and so there's only 1 set of closing costs. The thing that you'll like about that is that we talked about ARMs, so in this space, we offer interest only. It's kind of like describing paying the lowest amount possible for the duration of the time that the construction process is taking place. So again, you hear a lot in the market space, oh, you don't want to ever do interest only, that's like renting. But here again, if you're going into the process knowing you only want the loan to just get you through construction, who cares if it's interest only? Because you're going to empty off the property sometimes 30, 60, 90 days anyway. Sometimes you even have a buyer, like Mario pointed out, even before the home is in completion. So it's okay to entertain an interest-only mortgage rate, because you're just buying yourself the time to get you through closing, okay? Then the renovation program, which we kind of touched on that a little bit. Now you still can get a fixed interest rate with that. That's a one-time close as well. You can borrow up to 125% of the value of the home. So how that works is, I've got this home and it's a fixer-upper, and I'm gonna call Wanda because I need carpet replaced, I want different bathroom tile, I want the kitchen renovated, and she's provided me with an estimate that I'm gonna need $45,000 to do those upfits. And so that amount of the contract will be fixed to the purchase price, and it's like a bundle loan for the purchase price of the home, including her contract for the upfits that are going to be made. So that's what we're allowing essentially with the renovation loan. And so even in that space, there's multiple programs to choose from in that regard. And what happens at the end of that transaction, after Wanda has gone in and done all of her upfits, then there is a new appraisal value for the home because there's been improvement done to the home. And so now the home has a new value, and that's factored in as to what improvements have been made. So those are the primary reasons, that we are cutting edge, at least in this marketplace, because not all large banks are offering such products. That would aid people such as yourselves that are real estate investors, people in construction, people that are landlords. That's how we're differentiating ourselves from other big banks out there that do not offer these products. So do you have any questions at this time about anything I've said or have not mentioned?
Just one quick question. The vacant land, is that the purchase land?
Absolutely.
Wow.
Yeah, absolutely. Any other questions? Okay. Well, just to wrap things up, we have definitely absorbed the time that we have allotted here. I want to thank you for your participation, your timeliness, and for your engagement with questions. I believe everyone that was not a presenter has signed the sign-in sheet. We will follow up with you. I encourage there to be one-on-ones with each of the panelists to answer any additional questions that you may have or things that may come up, or if at the bare minimum, someone that's a contact for you, which to be able to refer people to for additional information or business. We collectively as a group do these talks on a monthly basis. It's our way of giving back to the community in terms of empowering you with information that you may not have been privy to or that you've had to pay for elsewhere, but not in this environment. And we have one ask of you is that if you learn of persons such as yourself or others that are needing counsel in any of our areas of expertise, that you would please share our contact information with them so that we can add value to whatever their transaction may be as well. So please